Hello, this is Brian Shannon from AlphaTrends.net. Today is Wednesday, the 4th of June, 2008, and the market's closed. My screen right now is showing the S&P 500 at down a penny for the day on the spider at 138.08, and you can see here, like I said yesterday, it seems as though this market may be a little bit of neutralization in here as it tries to stabilize at this prior level of resistance near, just about 137, and the support in here that it's been finding recently. But we do have these lower highs in here, and the market is right at that 50-day moving average. We're broken this little trend line in here, so there's it could basically go either way here right now. Looking at the weekly time frame, I think the odds favor further downside from here, but the timing may not be quite exact in here yet. Looking at let's look at the hourly time frame. I've been talking about 137.5 to 138, and we've been seeing this 137.5 level tested a couple times. I think really where the downside probably accelerates is below 137, and that's the area where I would consider getting more aggressively short, and of course keeping an eye towards the exit door in case it fails to break down and hold below that level. But odds are looking like we're more likely to see a downtrend, in particular, this weekly time frame. The larger forces at work here, the sellers were found at the level where we had prior support last year, and now the daily time frame, kind of tricky here because it's trying to attempt to stabilize near that 50-day moving average. But the more times that this support is tested, the more likely it is to fail to hold, and these shorter term trends are clearly turning more negative with these lower highs and lower lows. So you've got to be very careful in here, and if you're trading the long side, you've got to be very careful in here because the sellers have been in control. If we look at yesterday, we saw this this move on the intraday time frame at about 3 o'clock Eastern. The market saw some very big volume, and the buyers were able to push the market back up towards the daily VWAP yesterday. Well, today the market gapped down, stabilized a little bit of rally, and then broke down again here later in the day and gave up all those gains. And now the average price of the last 2 days is at about 138.40. So even with yesterday's big volume, which appeared to be some buying in here, the average price is at about 138.40 for the last 2 days, and that means that the sellers are in control here for today and Tuesday. So you've got to continue to be careful. The buyers are trying to salvage the market here, but it's just not very convincing looking when you look at the 10-minute time frame. I think a move back above 139.20 or so would get it back above that 5-day moving average and put a higher high in, and you could say that we have a higher low right here on the 10-minute time frame. So again, I'm going to say that it is a very tricky market to position yourself for longer term moves, and your better moves are going to be coming right now based on the shorter term time frames. The Russell 2000, just a real choppy trade in here. Looking at the daily time frame, we're still below that declining 200-day moving average. We've got this market that's I think breaking this trend line is going to capture the attention of a lot of people and maybe bring about more selling. But realistically, it holds up pretty good. It was up, 2/3% here today. And looking at the 10-minute time frame, we've still got a rising 5-day moving average. Just real choppy action in here. More range bound than anything. The key level in this market is going to be 75. Getting above and holding above there could lead to another squeeze move higher. But we're getting into this area where you would expect, like we've seen in the S&P 500 and like we've seen in the Dow Jones, and I had these drawn in from yesterday, that this prior level of support, in the Dow and the S&P 500 acting as resistance. Now the Russell 2000, perhaps we're going to see that happen as well. And I think that, again, breaking this trend line and this level here at about 73 would get the attention of a lot of sellers. So just be sure to be quick on the exit if it looks as though the market's breaking down. And here we can see that trend line even on the hourly time frame here. The The financials, these guys continue to deteriorate, just slowly dripping lower, lower highs and lower lows in here. Again, I'm not involved in the financials. I think there's just too much news in them that they're gonna, bad news in in Lehman Brothers and the stock rallies on a day like today. Of course, it was oversold, and bad news often comes at turning points. As the people who are anticipating this news take the opportunity to cover their short positions. But there's clearly still a very badly damaged market group here, and from what I see, no reason to be involved. Semiconductors had a good day today. They were up 60 cents, or about 1.8%, and I'm not sure, but I think that puts them back into positive territory for the year again. So, the semiconductors do hold up a little bit better. They, we've got a higher low in here, it's looking like, for now, and a lower high. So, just some consolidation underneath this prior level of important level of support from late 2006 and early 2007 that then became resistance late 2007 as well. So, more neutral. I mean, there's a lot of these groups are really looking kind of neutral. So maybe this is is going to turn out to be a dull summer trading. We'll see. There's still a lot of great trade setups. One that I'm looking at is this little company called Vivis, symbol VVIS. You can see it was up on huge volume about a week and a half ago. It's consolidated on lighter volume. It broke past this resistance at about 6.5. That resistance became support. Looking at a weekly time frame, you can see it broke to multiple year highs here. And it's got a very big short. I'm not sure if I could say very big, but it's got about 3 million shares, I think, short. Not many of them are now in a winning position. You can see on the 10-minute time frame here that it just broke past the short-term level of resistance and created a higher high. He's got these higher lows leading up to it. So I think you can get involved in a stock like this with a stop even as, right around 680 or so. But now the trend is aligned. We've got a weekly uptrend, we've got a daily uptrend, we've got a 10-minute uptrend. So this is trend alignment. This is where there's a good opportunity to get involved. By the way, I don't know if you saw TK's video yesterday, but take a look at my site there. He had a very positive endorsement for my book. TK, that's T. Kevin Feehan, spent 35 years trading on the floor of the New York Stock Exchange. He said this is the only technical analysis book you'll ever need. So, take a look at that. The NASDAQ 100 continues again to be range bound in here. The range being basically 48 to 50. Nothing really happening, just choppy action in between in here. This market was up 1.2% today, though, and I think getting back above 50 is going to take a lot of bearish participants off guard here. We've got this, prior level of support over here. It wasn't as strong as what we've seen for the S&P 500 or the IWM, but clearly this is an important level here near 50. And right now, this is a hard-fought battle. It's basically neutral. We're heading up towards the top end of that range again. Perhaps it's going to break out, but the market has expended quite a bit of energy getting up to this level. Keep an eye on, maybe not that. Let's redraw that. Keep an eye on this trend line near the 50-day moving average, and of course that more important level of support, 48.75. Breaking below that would undermine the confidence of a lot of participants, but taking it back above 50 would get the bears to maybe cover. So I'm looking at this market really as neutral right now. People email me and say, take a stand, which side are you going to be on? That's up to price. It's not up to me. The market doesn't care what I think. I think that this is basically more of a shorter-term trader's environment while we have these kind of range-bound, just search for direction markets.